it. There's so much stuff going on. There's so many things happen. It's such an incredible time to be alive and to have dry powder. I would be devastated if I had not raised this fund and I was sitting on the sidelines just watching all this stuff go by and not being able to take positions on.
One.
Coming up, we are talking to the co-founder and managing director at SP Ventures all about raising a third fund in AgTech. The Modern Acre is presented by Ambrook. Ambrook provides modern accounting software built for growing farms that need to know their numbers, track real-time profitability by each enterprise, and make expansion decisions based on data, not just gut feel. To learn more about Ambrook, check out ambrook.com or hit the link in our show notes.
All right, Ty, I got to tell you about this story from a couple of weeks ago. This concert that I went to just had quite a funny experience, but my wife and I have been liking this band called Treaty Oak Revival. They're like a country band from Texas. They're like in a lot of big shows. They're like in Landman, like I'm sure you would recognize the song. So we booked tickets. They're playing at Golden One Center in Sacramento, and go check out this concert. And we're walking into the show, and it just seems like a younger crowd, which like didn't set off alarm bells right away, but like to start looking around and like it is skewing like high school vibes. Like this is like just kind of a weird thing. Usually go to a country concert, it's like quite a mix, and you just feel like you're in between the crowd of older people, younger people, and we get into the show and it's like even more pronounced of like everyone is like super, super young, and I'm like feeling like old, which usually I'm not feeling old at these kind of things, Ty. And then we were in line for a beer, and a lot of people are ordering sodas, but like this is kind of weird. Like why is nobody ordering beers? And then finally we put it together. We were in line, and there was a guy in front of us who was slightly older. He turned around. He's like, thank goodness there's some other old people here. And we're like, what? We're like, what's going on? And apparently this band is like super popular for like the 15 to 20-year-old crowd. It's like a TikTok country band, which I was not aware of when I booked the tickets. And so it was much more rowdy than I would have expected from a country concert. They have this one song called Boomtown where everybody basically throws their drink at someone during the show. And we're like, we're too old for this to have beer thrown on us. So we're like on edge the entire time. And so it was quite the surprise awakening. So if you're into Treaty Oak Revival, be aware for their concerts. You might feel old if you're in your late 30s.
Cool story, Tim. I feel like that's just a story of you discovering that you're closer to 40 than 20.
It was a surreal experience. I've like never felt that way in my life. Of like you go to all these things and you like never like think about your age. This one I've definitely felt old, which is weird.
Now I'm just preparing for your midlife crisis. Like, what am I gonna do when you have your midlife crisis?
Yeah, I got to pick out a good one. Yeah, I turned 39 in a couple weeks, so I got a year to prepare for my midlife crisis.
Can't wait. I can't wait for that.
Should we like start a new side hustle for it? Like just double down on like side ventures?
We'll have to think of something for it for sure.
Yeah, I actually almost bought a domain over the weekend, but I figured I wouldn't bore you, so I'm going to run that by you later, maybe for another show.
You didn't bring it to my desk?
Didn't bring it to your desk.
All right, well, I'm super excited for this conversation with Francisco, Tim. It's great to talk to an investor in AgTech right now because, AgTech investing, not so hot right now. I think there's a lot of discussion of, are we at the bottom? What is going on with AgTech investing? How much has been deployed? Funds are not renewing. And SP Ventures is an example of a fund that is raising their third fund. And they've raised $50 million. I think they're targeting close to 100. So they're in that process right now. And just talking to Francisco about his optimism for AgTech was super inspiring and refreshing in this discussion.
Let's jump in with what's top of mind for Francisco.
Kind of top of mind. I think I've never been more excited in my life. Speaking specifically from where I'm coming from, I'm seeing a triple disruption transformation, and they're all intertwined. It's a mixture blend of geopolitics, technology, and climate. All of them, of course, being driven one by the other and interconnected. And this is building a lot of new opportunities. It's the solving existing competitive edges. And I'm seeing a lot of my peers getting desperate. But I think this is when it's so exciting to be alive and exciting to have dry powder to be investing in this current era.
I can only imagine what it's like right now as an AgTech investor. I think that it's we've seen this past, 10, 15 year run, and now we see a lot of people fleeing from ag tech. And I actually made a post recently on LinkedIn about why Commodore put out one of their focus areas is on agriculture. And I made the quippy remark of, "Is ag tech cool again?" Because it seems like ag tech has not been cool for maybe like a year or two, and a lot of people have said even at World Agritech recently, "Have we hit the bottom? What does that look like?" So I'm very excited to dig into your perspective on all of that. But let's start, Francisco. Tell us a little bit more about you, your story, and what led you into agriculture and investing.
Okay, so first of all, I have absolutely no ag background until I'm 27. I completely stumbled and discovered this what I believe to be the greatest investment opportunity and mission driven opportunity in Latin America and in Brazil when I got there. I'm originally from Brasilia. That's the capital of the country. It's a modern city. It was built in 1964, so it's a planned city. My dad was a diplomat, so we lived abroad. That's how I got to see a lot of the world. Lived in Singapore, lived in Spain, lived in the U.S. Became a huge fan of American exceptionalism. That's why I ended up starting my company in an area that the U.S. is particularly exceptional, which is venture capital and entrepreneurial finance. Trying to bring the American ideals and the American financial innovation replicated here in Brazil. Started out my career in traditional financial services. I worked in banking, I worked in hedge fund. When I was 27, the Brazilian Economic and Development Bank, the BNDES, recruited 6 people to start out the first deep tech seed venture funds in Brazil. And the objective was to kickstart the Brazilian venture capital industry. This was 2007. So remember, in those days, guys, there were significant doubts of whether the ecosystem Silicon Valley model could replicate anywhere in the world. At the time, it was happening in Israel, it was happening in China, but all the countries were trying to do copy and paste, and it wasn't working. So there were a lot of developmental initiatives, and the Brazilian Economic Development Bank got this initiative. I applied. Um, as I mentioned, I had lived in the US. I had seen the dot-com explosion. I was very influenced by that. And I thought that being able to back entrepreneurs doing frontier science, reinventing industries just seemed something extremely exciting and what I wanted to do. So I applied, I was recruited, and I became the branch manager of this fund for Sao Paulo. And that's where I started the company. The objective of the program was to get first time fund managers, give them seed funding, and that they could start their own GPs at the time. That's how Sao Paulo Ventures got started. That's what we're called, Sao Paulo Ventures. To give you guys an overview on Sao Paulo, Sao Paulo is where 40% of Brazil's innovation investment takes place. It's one of the 27 states of Brazil. It's where Latin America's largest port is located in Santos, just about an hour out from where I am. It's the nerve center of Latin America's financial services industry. It's Latin America's Wall Street. It's where all the consulting companies are headquartered. It's where most of Brazil's deep tech industry is headquartered. So it's where you have human capital. It's where you have money flowing. Of the 10 best highways in Brazil, 10 of them are in Sao Paulo State. It's the powerhouse of the sugarcane and ethanol industry. It's where most of the world's citrus FCOJ is produced. So it's really an economic powerhouse. So this is a great ecosystem to start out. So I got lucky to be able to get started there. Very well. That fund from the NDS was not an ag fund. I had no background in ag. I went out to look at investments in oil and gas, medical device, new materials, urban mobility, the traditional range of sectors that people were invested in back then, nanotechnology, and I started to visit the leading research centers. I started to visit and receive entrepreneurs. And very quickly, I stumbled upon the realization that I think has become mainstream. At the time, it wasn't to average Brazilians. That what Brazil has that is most similar to Silicon Valley in terms of entrepreneurial mindset, in terms of frontier science production, is agriculture. It's the only sector that, if you look over 40 or 50 years in Brazil, has high, consistent productivity growth year after year. By the way, just to give you guys a number, if you look at the last 50 years, industry in Brazil has basically flatlined productivity growth. Service has grown around zero point 0.7, zero point 0.8 per year productivity growth. Agropecuária, which is ag and livestock category, has grown by 3% per year. And this is over 50 years. So it's not something that happened in a decade. And that's why today, agribusiness, as we defined it, is roughly 25% of Brazil's GDP. Brazil went from being a net importer of food in 1976, 77 to become the largest surplus producer in the world. 80% of our agri production is exported. We're definitely the biggest influencer of global food commodity prices, and very diversified. Export to over 180 countries. And if you look at the basket of products, whether it's soybean, corn, cotton, poultry, beef, citrus, coffee, cacao, across the board, it's a very diversified cross crop and on a continental diversification, which is another element that we took as a major bonus. If you look at Argentina, for example, they are great farm operators, but because it's a smaller country, they're very susceptible to climate shocks, right? You have a horrible El Nino, they'll have a horrible harvest. In Brazil, since we're a large country, given a data point that many people in the US don't know, Brazil is as big as continental USA. If you take out Alaska and take out Hawaii, so it's a very large country. A third of it is Amazon. Contrary to what a lot of people think, Brazil is an environmental giant in terms of natural vegetation. Farmers in Brazil great respects of their natural vegetation, and the other two thirds is where we diversify ag production. So we looked at all these things. We stumbled at these things. We saw the leading research centers. There's a research facility in Brazil called Embrapa, which is the Brazilian agriculture research company. It's a public institution, and it's 46 research institutions spread out throughout the country. Each one specialized in one biome, in one crop, soybean, etc. These are the guys that tropicalized soybean. These are the guys that did much of the breeding of cattle to be able to get not only very high quality cattle, but cattle that is adjusted to the Brazilian climate and that we could become this huge powerhouse. So we saw this. We saw a lot of science. We saw this huge entrepreneurial culture, and we decided to specialize and become a specialist VC in this space. And then the rest, left the BNDES project in 2013, 2014, raised our first proprietary fund, then raised our second, now we're on a third. And today, I think we're the leading AgTech venture fund in Latin America, but still very Brazil oriented. 70 to 80% of our investments are in Brazil. 80 to 90% of our team is in Brazil. And Brazil continues to be the leader in the region.
Man, so many questions, so many things to dig into. I definitely want to double click into Brazilian agriculture and Latin America agriculture. I think there's a lot of interesting things happening there. You mentioned kind of exporting more than you grow, like the US is kind of the inverse of that, where we're importing more fruits and vegetables. So I want to chat about that, but let's stick on SP Ventures and the fund a little bit here before we do. You're now on your third fund. You announced a couple months ago, I think $50 million closed on the first fund. I think there's still more to go there. So that's an awesome testament to your progress with funds 1 and 2. So maybe just talk to us about the thesis for Fund 3, what you're looking to do there, and any potential learnings you've had from Fund 1 and Fund 2.
100%, Tim. So first of all, it's been very hard. It's been very hard. I think AgTech investors, we face a challenge that is perhaps one of the hardest challenges of any other industry in the VC space, which is we have longer cycles, right? So, for example, we started investing in 2014, 15, but 16, 19 was the growth of our Fund 1 investments. We still haven't exited our biggest success cases of Fund 1. So we still have a very low DPI, even though the three top performing companies in our Fund 1 are very large organizations in the biologic space. And the fund is a TVPI success. The DPI, the distributed paid-in capital, is very low. So usually, in traditional venture capital, when you go and raise your third fund and you still haven't given back money from your first fund, that is a recipe for disaster. You usually don't get to do it. So for us, Fund 3 was an extraordinarily hard fund to raise because we still hadn't given back the money from Fund 1. And we were able to break through that bubble. And I think that was one of the hardest challenges that we've had as a VC firm, was to show to investors that when they look at AgTech as an asset class, when we show the structural reasons, and this is true in the US, this is true in Europe, this is true anywhere in the world, in tropical environments, we actually think it's a little bit less bad, but it still is. And it's that the adoption cycle of technology in farming is simply slower. It's slower because farmers don't buy technology 365 days of the year, just like consumer customers do. I mean, you can't roll out something all year. You got to choose your windows. Farmers like to pilot and try things for specific times. They're a conservative bunch. You have some bad years as commodities are cyclical, and then you got to take a step back and retract. You have very large, very high working capital needs, right? So you got to finance your farmers in many of their acquisitions. In Brazil, 220 to 280-day working capital cycles in many cases, like, for example, biological inputs. And if you compound that in a region that has very high interest rates, it makes it harder to be able to scale very fast. Second, infrastructure, connectivity, smartphone penetration, all these things are lacking or behind or coming low. So things take longer. So you need to be able to have LPs that understand that this is a longer cycle, but it's not necessarily a worse category. You know, the returns are there. It's super critical. You can get a diversified bunch of investors ranging from corporates, ranging from impact investors and pure play financial investors. So, but it takes a lot of time demonstrating, proving, showing results. So Fund Three was a tough one, but yeah, we're up and running. We got a good blend of investors. We're almost at $50 million. We've done 2 closes. We've done 4 investments already. 3 additional deals approved in the pipeline. So we are, let's say, at 7 deals already between what we've invested and what we've approved and our late due diligence. And it's interesting, Tim, because if you look at our vintages, the things that we're deploying, they they talk to each other, right? So if you look, we did our first biologics investment in 2009 in a company called Bug Bioagents that we sold many years later to corporate out of Harlem. I think that was the first venture-backed deal in Brazil and what has become the biggest biologics market in the world. But we've continued to invest in biologics in every single vintage. So now, Fund Three, we're continuing to invest in biologics, but on a completely different game plan. Biologics in Brazil are no longer a niche crop protection business. Now it's a mainstream crop protection. It's becoming a mainstream biofertilizer business as well, catalyzed by all the geopolitical crises, whether it's Strait of Hormuz or whether in Ukraine and the Black Sea. As fertilizer prices have become very volatile. And to give you guys an idea of how big this market could become, the crop protection chemical market, fungicide, insecticide, and herbicide, is between 12 and $14 billion in Brazil. So this is part of that market share that we're getting. But if we go to the NPK, the fertilizer category, it's a 20 to $25 billion market, right? So of course, these markets won't become entirely biologics, but you have a very large pie from which you can buy out of. So we see significant growth. So we continue to invest in biologics. That continues to be a major category here in our Fund Three investment thesis. Obviously, looking at new generations of products. So looking at more complex formulations. We're looking at companies that are implementing AI for faster bioprospection, discovery, better formulations. We're looking at companies that are launching peptides. We have founders that are working on mRNA. So loads of things happening. The fact of the matter is the region has a few competitive advantages in the biologic space when we talk just about this category. One of them, Tim, it's that because it's a tropical environment, so we get to plant all year long. We don't have winter that freezes biological activity. This means the top line can be higher, can get more output. But as you guys well know, this also means that the pest, the disease, the weeds, the soil erosion, it also goes on all along. So it's a lot more complex. And in the crop protection side, it means that you're selecting all year long the resistant pests, right? So you need to have more weapons in the arsenal. And traditionally, this has become a necessity as biologics have become one of the options to be able to reduce resistant levels. So this has really, really helped the space. So biologics is a major category. And then we look at the pain points, right? We've invested in education and we want to continue to invest in that. The local governments have been a complete disaster in providing good quality education to agronomists here in Brazil. And the sector is extremely knowledge dense. The demand for knowledge is extremely pulverized and fragmented across the continent. Private education in Brazil is big business. Many companies are publicly traded in the space. So we've been looking and investing in companies that can solve the bottleneck of being able to provide high quality, lifelong learning, technical knowledge for agronomists and the entire value chain here in Brazil. Another major area is logistics. We discussed a little bit how agribusiness has performed much better than the rest of the economy for 50 years. This means that Brazil, I think we're going to do 300 million tons of grains this year. I mean, it's surreal. And the country has obviously not been able to attract foreign direct investment for infrastructure at the same rates. So if you look at the Brazilian agribusiness, on one side, it's a huge success story. But then you look at the logistics, it's all highway. There are huge lines and ports. The Brazilian farmer leaves a lot of his productivity outside the farm gates. I've spoken to a lot of U.S. Midwest farmers that visited Brazil and went to Mato Grosso and so on. They said, guys, when Brazilian farmers get the infrastructure sorted out, we're screwed because it's such a loss of productivity. And we look at the U.S. I mean, you guys have railways from coast to coast. You have the riverways of Missouri, the Mississippi. You got incredible ports like New Orleans, NOLA, and here it's a disaster. So investing in technologies that are able to optimize this kind of challenge is another area that we've been investing. And then, of course, an area that we're probably the most active investor in the world is financial services, AgFintech. This is a near $1 trillion business in Brazil, definitely in the high hundreds of billions of dollars, but growing. It's going through there's disruption for multiple reasons. As we mentioned, farming is one of the most working capital intensive businesses in the world. And the risks associated with this are risks that traditional lenders are not capable of doing, right? It's biological risk, climate risk, commodity price risk, FX risk, and just very complex. There's data issues, etc. So building a new tech service, tech dense, tech driven financial services industry for farmers has been key, and there's been a lot of deregulation. Brazil has become an epicenter of financial innovation across multiple categories, right? The most valuable neobank in the world is Nubank, based out 6 blocks out from our office. There are multiple unicorns in the NASDAQ or Brazilian fintech companies. And we've seen over the past 4 years the same cycle become a privy in agriculture. But guys, one of the sectors that I'm most excited about, and you mentioned, Tim, in the beginning, Y Combinator, going on the same category. I read an article from A16Z on AI and the impact of AI on marketplaces, and it resonated with something that we've been seeing here tremendously. It's saying that AI is not going to enable new marketplaces, but it's going to bring back a lot of marketplaces that were in the graveyard. Because when we look at marketplaces that didn't perform because it demanded specialty human based services. And the unit economics of those in traditional marketplaces just didn't fit. But when you bring AI to the game, and you can have an agent delivering that specialty service, that specialty conversation with the farmer or with the other party, talking not only very technically about the product or service being oriented, but also having a lot of information on technical assistance, a lot of information on logistics optimization, a lot of information on a potential credit transaction, and being able to do that 24/7, and being able to mix that up while they also talk about the latest football scores and country music and all these things, making it a very human experience. We start to see a lot of marketplaces in agriculture that didn't work out in the past, but now the unit economics works. The A16Z article, it talks a lot about human resources marketplaces, these kinds of things, but we see it perfectly for ag, substituting traders, whether in farm equipment, whether in grains, whether in inputs, the position of the traditional input retailer here. So this is an area that I think Agriculture is probably one of the last major economic categories to be disintermediated by digital technologies. And I think AI is going to solve a significant amount. At least we've seen many of our portfolio companies like AgroFire, Rural, one in farm equipment, the other one in cattle, simply start to really scale and demonstrate positive unit economics in this new reality with AI. So these are some of the things that we're super excited. Many of them really connect with what we've seen in Vintage 2 and even things that we started to invest in Vintage 1. What we're not doing so much now, guys, is investing in technologies that go inside the farm and that we try to pick the pocket of the farmer, right? We noticed from our first fund, it's very hard to scale and get those unit economics successful. It's trying to sell hardware-based solutions or even software-based solutions to farmers. You need to have a different backdrop. Now, with the agentic opportunities, for example, one of our farm management software companies here is a leader. Aegro is the leader in the Brazilian market, and they have the possibility of implementing an agentic procurement platform and shift away not only from selling a farm management software, but also become a input marketplace, helping the farmer become a much better buyer of inputs. This is something that gets us very excited, right? And this is something that was absolutely impossible to do until 2 years ago. So going back to what we started, I'm super excited. There's so much stuff going on. There's so many things happen. It's such an incredible time to be alive and to have dry powder. I would be devastated if I had not raised this fund and I was, sitting on the sidelines, just watching all this stuff go by and not being able to take positions on.
I love your energy. It gets me super amped up. And I just love your passion for LATAM and Brazil. And I think that's super cool and comes through, and just your passion for agriculture. And we're going to get into that a little bit more, comparing it to American agriculture. But Francisco, you talked about how hard it was to raise your third fund, and I think like I think you're not giving yourself enough credit. Like, I think that, what we've seen is not a lot of second, third funds from ag tech investors, and so we're seeing a lot of firms exiting from being able to raise their next fund. Like, how were you able to? Like, why were you able to be successful, and we're seeing others that maybe they're of a similar situation where maybe they have some successes, but they don't have good, distributions on their first fund, and they're unable to, like, what was your secret sauce to get that third fund that others aren't able to crack right now?
I think it's a combination of factors. The first thing, which is a lesson that I learned watching a podcast with David Rubenstein from Carlyle, I believe, the private equity fund. And he said alternative investment officers always have to be fundraising. So we never stop fundraising. Like we got to the second close, we're going to get to the third close. 2 weeks later, we're going to be out on the show pitching Fund 4. You start raising your next fund the moment you do your first close. And actually, those 2-3 years, Tyler, they are the best moment to do the raise because it's when you can actually have a conversation with an LP and you can say, listen, I'm not raising a fund. I just wanted to talk. Of course, you're raising a fund, right? I mean, that's complete BS. Every single conversation with an LP, you're always raising a fund. It's just that my closing cycle is 3-4 years down the line. So you're already preparing the conversation, telling him what you're going to be doing with that money, what you expect to deliver, generating trust, generating confidence, building the rapport. So first of all, always be fundraising. That's fundamental. You have to always be selling up, to always be out on the event. The guys who raise a fund and then spend 2-3 years locked up in their office just doing deals and then come out after 3 years. I mean, it's especially in emerging markets, man. That doesn't work. Sales cycle is very long for us. People complain about the sales cycle to farmers. Sales cycle for an institutional check. I've had investors that took 8 years. IFC from the World Bank. It took me 8 years from my first meeting all the way to the conversion, and I have several others that took the same. I think the fastest investor that I ever had was a 3-month check, but that was an aberration. So first of all, you always have to be selling. I think the second thing that we learned is diversification of LPs. So you have to have an order, and you have to always be attacking all of these different categories. Now, when I say diversification, I don't just mean a lot of names. Of course, a lot of names is important, but I mean different categories of names. So, for example, you have the traditional financial investors, the guy who are only investing to be able to get financial returns, 100%. Those are critical. Then you have the strategic investors, the guys who are investing because they want to have access to what's going on in the region. This is something that for us is particularly strategic and valuable for multiple reasons. First of all, because Brazil is a number one or number two ag market for almost any input or farm equipment manufacturer and vendor in the world. And these guys usually don't have a innovation team here on the ground. Their innovation team is usually in Basel or in North Carolina or in Cambridge, Massachusetts, etc. So being able to invest in a venture team in Latin America that is going to be giving them in-depth detail of everything that's showing up on the window from deal flow in biologics, in AI, in hardware, in software, how adoption is going, where transformation is going. I mean, whether it's for M&A screening, whether it's for partnerships with their operation, whether it's simply to understand how they can react to threats and opportunities. So that gives you a huge clout. So corporate strategic investors. Third, developmental investors. So these are the guys like the World Bank, like the Inter-American Development Bank, and then across the world. Uh, these guys have become more and more active. They've always invested in agriculture, but as they've seen more and more the threat that climate change and geopolitics represent to this category, it's become a bigger and bigger issue. So we've been able to show, and we've invested tremendously in this area, building a platform, bringing people that are very senior in impact funds to be able to categorize and demonstrate in KPIs how biologics substitute chemical fertilizers and chemical pesticides, how biologics build climate resilience, how biologics enable crop diversification, which allows a step towards regen ag. And we've been able to show and demonstrate. So with this, we've been able to bring significant amount of developmental capital. By developmental capital, I also mean impact investors, ranging from family offices in Europe to the Soros Economic Development Fund, the Open Society Foundation, besides the large DFI. So that's been a third. We've been investing heavily in going to the Middle East and now going to Far East Asia. We have the investment from Minerva, which is a number three slaughterhouse in Latin America, and whose biggest shareholder is the PIF, the Sovereign Wealth Fund of Saudi Arabia. So we've been going over there. Those countries in that region have a major concern with food security, and Brazil is one of their major, if not the largest, food provider. Protein calorie provider. So diversifying the pockets and then being very active in airports around the world, traveling, shaking hands, giving cards, pitching, and being very active on maintaining those relationships and always delivering what you promise. And going back a year later, 2 years ago, a year ago, I told you I was going to invest in these companies. I invested in these companies. This is how it's going, demonstrating consistency. And I think that's been the only recipe that we've been following, Tyler. And I think that and showing the results of the portfolio companies in Fund One, Fund Two, demonstrating being very sincere. I think this is something that is critical and we've learned. I think that when you open up the kimono and you show how many mistakes you made, I think in venture, guys, we're very lucky because we are in the one category where we're not only allowed, we're expected to make more mistakes than we get things right, right? And I think what LPs, the professionals ones, want to see is, first of all, are these guys sincere? Do they show all the mistakes they do? Because everybody makes a lot of mistakes in this business. Second, do I see an ability that these guys are learning from these mistakes and correcting and making new mistakes, right? Because that means that if I invest in the next fund, it's going to be better than the last one. So I can use the last one as a proxy, but looking at the next one is going to be better. So they want to see that not only are you transparent, but that you're also adaptive, that you're learning and you're improving and being consistent. Man, and I think that's been part of the recipe. It's been part of the culture here at SP Ventures. So far, it's worked, and I'm very, very, very confident that in the next 2-3 years, we're going to give back the money from Fund One. We're going to validate the thesis, and then Fund Four should be a walk in the park. I've told my team every single time that the next fund is going to be a walk in the park, and it's always harder than the last one to raise. But this time it's changed.
I think that's super good advice. Diversification of your LP base, and then always be raising it. I think that's good advice for founders as well. Like once you raise your Series A, you got to be continually talking to investors to kind of keep the momentum building for Series B. And when you're looking at kind of VCs that you're looking to raise from, get some diversification there so you have a broader range of experience and knowledge to tap into. So super cool stuff there.
100%. 100%. I agree 100%. It's super valid for founders as well. That is also a message I always give the founders. They need to be always maintaining relationships. They need to be sending out those emails either on a semesterly or a quarterly basis, giving prospective next round investors information on how the company is going. Always maintain your existing investor base happy because re-ups are critical to be able to gain traction for your next follow-on round. But 100%, I agree with you too.
Cool. We said we'd circle back to it, but as we close here, Francisco, wanted to just dig into the Brazil and Latin America dynamics right now with what's happening with the farm economy. You said you had some thoughts, kind of contrasting that to what's happening in Europe and America. So let's wrap things up and kind of chat a little bit about that.
Yeah, so it's wild. It's wild in Latin America right now. And I'll use Brazil as a proxy. So Brazil's had extremely high interest rates for the past 4 years. So just to give a little context on why this is happening, the previous administration here in Brazil, the Bolsonaro government, he formally made the central bank independent. That was very important structural reforms because we had a long history of the previous administrations of the Labor Party, the left, manipulating the central bank to lower interest rates and try to control rates. And that led to high inflation, collapse, and we had multiple economic crises, right? So the last administration did a very important, prudent fiscal monetary reform. Central bank became indebted. The current administration, left-wing administration, has been on an extraordinary expansionary fiscal policy, spending a lot of money for the last 4 years. Central bank has pulled back interest rates high to be able to control inflation. So what we've had is very high inflation, and for farming, just to give you guys an example, we're talking about a 15% basic interest rate. So as you guys have in the US, the Fed funds, which I believe is between 350 and 375 or 375 and 4, something along those lines, Brazil is 15. It actually just got cut to 14.5. We have inflation of around 4%. So we have real rates of around 11%, which is not obviously what the farmers pay. The farmers pay a much higher rate on top of this. So farmers have been going for 4 years of very high interest rates. And after Ukraine, Russia in 2022, where we had a simultaneous spike in input prices, but also in grain prices had come down, but input prices had remained relatively high. So we had a compression of margins. So we had this combination, right? And we've been seeing default rates of farmers be very high because of the situation, because of high interest rates and compressed margins. So farmers are indebted. They've been leveraging themselves year after year. And then right now, we're on a little bit over 2 months of the current conflict in the Middle East, guys. This was not on the radar, right? This was not on the spreadsheet. And we've had 65% initial hike in nitrogen prices, right? Urea, ammonia. But you've also had a huge impact on the phosphate industry because of sulfuric acid, which is also produced in that region. Second, diesel prices have gone up through the roof, and China, who's a big exporter of diesel to Brazil, stopped exporting diesel. The Russians stopped exporting fertilizers as well to be able to maintain, at least momentarily. And then last but not least, already predicting that this will contaminate prices in the Brazilian economy, the central bank stopped lowering rates. So we had a triple shock in these last 60 days. You had a shock in fertilizer prices. Remember, fertilizers represent COGS of between 30 and 40% of farmers. So it's very relevant. So when we have a spike, it really squeezes up the margins. Second, diesel, and Brazil is particularly susceptible to diesel because we import most of our agri-chemicals. So you have the diesel impacting the sea freights. Then most of our logistics is highway trucking. So diesel impacts that. And then you have farm machinery mostly operating on diesel. So diesel impacts that. So diesel prices have gone up to the roof, and that's also squeezed. And last but not least, the respite that was expected to come from interest prices have not come. So these last 60 days have been very tense. And of course, the size of the impact will depend a little bit on how long the situation persists. But giving you an optimistic angle, which is mine, I think from a structural perspective, especially for our investment theses, some things are extraordinary. So a few. First of all, biologics, right? Biologics are produced locally. They have no correlation of oil or with US dollar prices. And they're not perfect substitutes either for fertilizers or in some cases even for crop protection chemicals, right? But they're complements, they're catalyzers, and to a certain extent they can substitute, especially nitrogen, where you can have more nitrogen fixation platforms. So we're seeing a structural opportunity for increase in biological adoption, which was already going through the roof for a decade in Brazil. So, as we mentioned, it's already a $1.1 billion market. I think this is going to be another catalyzer. And on the biologic space, just to give you guys the two major catalyzers that we had in the last decade or 15 years. In 2013, 2014, we had an outbreak of a caterpillar called Helicoverpa armigera, which came to Brazil, I believe from Australia, already extremely resistant to every single agrochemical that was out there, every single chemical insecticide. And until then, biologics was mostly a sugarcane activity in Brazil. It was very used in sugarcane. And Helicoverpa was very aggressive in soy, in corn, in cotton, and and after trying everything, even getting new licenses for chemicals that had been prohibited and to get them reapproved, etc., nothing working. Grain farmers decided to try these, snake oil solutions that the cotton guys, that sugarcane guys used, and it worked. And that's when we had this cross pollination of technology from sugarcane into grades, and that enabled a new curve of growth. So it stopped being a niche crop protection in 2013, 2014 to become mainstream crop protection. And then in 2022, what was a niche fertilizer, biofertilizer play, when we had the true imminent threat of the Ukraine, Russia, Black Sea shortages, then people really started to look at biofertilizers as an option, and that was another major catalyzer. So these geopolitical conflicts, guys, even though they generate a lot of pain and a lot of stress, they tend to structurally be very healthy for our theses in the long run. You just have to buckle up in the short run. Another one that's been greatly benefited, guys, is, as I mentioned, I'm a block away from the nerve center of Sao Paulo, of the Wall Street of Latin America. And I'm looking at the banks. The banks are all closing the faucet to their ag financing. They're all saying, well, with this crisis that's going on in the Strait of Hormuz, I don't want to have any exposure to ag. I'm going to direct my loan portfolios to other categories. Let's reduce exposure. My ag fintechs, we are the earliest investors in what I believe is the most successful ag fintech in the world, which is AgroLand. These guys are having their best year. They're growing month to month. They're occupying spaces that traditional banks, Santander, Itaú, these guys, Bradesco, are simply leaving behind. It's an incredible opportunity to occupy that space. And of course, as a young company, be much more aggressive, much more experimental, not only in business model, but also AI implementation. And perhaps on the macro front, guys, one thing that I'm getting really excited. I don't know if you know, but Brazil is going through a corn ethanol revolution. In 6, 7 years, we went from having 2, 3 mills in the country to having 25 mills in the country, and huge line of projects that will be going live in the next 3 to 5 years. The ethanol capital stopped being in Ribeirão Preto, which is a sugarcane capital 2 hours out of São Paulo, to be Sorriso, which is a grain corn capital in the center of the country. And one of the things that I believe this crisis, this situation, this conflict is enabling is we've been having a lot of fights with the Europeans to get biofuels and ethanol into the sustainable aviation fuel platform. And the Europeans were always pushing back, hiding behind the argument that would take food away because corn is used for food, so you can't use fuel, etc., which was not true because in Brazil it's double cropping. We planted a second crop, so it doesn't impact at all food production. And now that the Europeans have probably 2 weeks of aviation kerosene. What we're seeing is a lot more pragmatism in being able to use sustainable aviation fuel with biofuels. And the same thing, hopefully, for container EMU freights, being able to use biofuels for container freights. This would unlock a huge economic opportunity, not only for Brazil, but for the US, as you guys are the largest corn ethanol producers in the world and biofuel players as well. So these unlocking of these major geopolitical situations. And to give you a concrete example of something that's already happened, we had been negotiating the EU Mercosur deal for 30 years. The Europeans never signed. They relied on 50% of their budget going to the common agricultural policy, subsidizing French farmers, subsidizing the Irish beef lobby, and they never opened themselves to competition from the Mercosur countries, Brazil, Argentina, Paraguay, and Uruguay. Now that they're geopolitically constrained, they're facing a hostile Russia, they're facing economic pressure from the United States, the current administration, and the Chinese manufacturing powerhouse is currently eating European industrial base for breakfast, right? I mean, if you look at the automotive industry, you look at the green technology industry, the Europeans had no option but come to the table, and we just signed the EU Mercosur deal, creating the largest free trade area in the world, over 700 million consumers. So, I mean, the current crisis and the current geopolitical transformation is making a lot of new opportunities, and I think that we are very well positioned. And even on the oil, I don't know if you guys know, but Brazil in March produced over 4 million barrels per day of petrol. We're expected in the next few years with the new deep sea oil wells to surpass Canada as the fourth largest producer of petrol in the world. So, I mean, a lot of good things going on. I think the moment is exciting, but yeah, have to focus.
Well, you've got me super excited just about the opportunity in agriculture. The opportunity in Brazil and LATAM, I think, is really compelling, and I can see why you're so excited about it. Well, this has been great to learn more about Brazil, about LATAM, about your approach to investing, and congrats on all the success. As we wrap up, how can listeners get in touch and connect with you and SP Ventures?
Multiple channels. We're very open, Tyler. We love to learn. Can be through my LinkedIn, can be through my email, which is francisco@spventures.com.br. I'm very active, can be on Instagram, Jardim_SPV. I'm active on all these platforms. We love having people reach out, push back on any of our assertions, send us deal flow, want to co-invest with us, want to work with one of our portfolio companies, want to access Brazil as a expansion. This is something that I always tell American AgTech companies, and I've been seeing some incredible entrepreneurs having this view. Like, for example, Tim out of Switch Bioworks, this new generation of deep technology biologics American entrepreneurs who are simply incredible, and they're simply right. Brazil has to be their number one expansion market. It's just larger. It has a faster regulatory framework. So if there's any biologics entrepreneurs in the US that we can help out, I mean, we have a challenge investing in deals that are not in Latin America. Our mandate is very concrete towards Latin American entrepreneurs, but we love to support, help anything that will bring more technology, more innovations to Brazilian farmers. It will be an honor to help you guys. Please do reach out.
So, Tim, what'd you think?
Super fun conversation with Francisco. It was awesome to get on a Latin America-based venture capital group, and SP Ventures is one of the more notable in the space, and just really awesome what they've been able to accomplish. Like, being on your third fund is quite an accomplishment, and like speaks to their credibility and the trust they've built up with their LP base. Like Francisco mentioned, like they haven't returned capital from fund one, and so raising a third fund is like very challenging to do, and a lot of good advice and nuggets in there about always being raising, like good advice for venture capitalists as well as founders when you're running a company. Like, once you close a seed round or series A, you need to be basically running it back to raise that next round and have that rapport and line of communication open with your investor base. And you just like hear the positivity and like the hustle in Francisco. Like, he's been doing this a long time, and he just still seems like very, very excited about it. So it was awesome to see, and cool to see what they're going to do with this third fund.
Hope you guys enjoyed it. Make sure you're subscribed to the podcast, following us on LinkedIn. We appreciate the support, you listening and following along.